So hi guys again. Good evening. Hope you're having a wonderful evening, a chilled one, a relaxed one as you watch how the markets are unfolding during the New York session. So today's on Monday. We normally do this analysis every Monday from 7:30 to around 8:30 max. Where we normally go through different markets, discuss different things, trading, answer different questions, and look at different topics. So today I'll take you through a couple of setups that I'm watching, a couple of interesting fundamentals that I'm looking forward to at the end of the week. Then I'll also take you through what's happening on my funded Forex challenge, something of the sort. I tend to confuse the two names. One is my Forex funds, the other one is I think my funded FX, something of the sort. So some of you bought my funded FX accounts with us, so we'll also be taking you through the different things that you can do from those accounts. And we'll also be updating you on how we're performing on those accounts and what is happening on those accounts. So I don't know where you guys would love me to start. I wish I would get feedback on that. But I think let me just generally start with my funded FX, then we'll look at markets, and then we'll call it a day. So we bought these challenges, I think, sometime last month in June, early June, I think. So there was an interesting offer. They were marking 1 year anniversary in the market. And when we spotted the offers, we shared it with most of you guys, and also most of you guys decided to join us in the challenge. So we decided it's only fair for us to at least share with you guys how the challenge is going, what's happening, the different things that we're learning, so that as you also share with us your journey, you can be able to at least track where we are and what you're doing. So from I took the 25K challenge. So you can see it's a demo. I think markets. I actually never knew you could link your account to my FX book. So you can actually do that so that you can get live stats of what is really happening in your account. It really, really helps to be able to distinguish some things. There are some stats which are very good and accurate. Others are a bit dodgy, so you really have to figure out how to do it. But anyway, looking at it, so last month was June, so I started trading this account last month. As we said, we bought it sometime early June. Let me share the screen for you guys to see. Okay, so hopefully now you can see my screen. So yeah, I started trading this account. So you can see I named it $25,000 phase one. But the starting balance was $25,000. I decided to link it here so that I could track how long it would take me to pass and the different things that would happen, how many trades, for example. So in June, I took a total of 6 trades. Here it records 7, but I took a total of 6 trades. So if you check my history, if you check the 9 trades that I have, you can see there's one trade, which is this trade. So there's this NASDAQ trade sell, and there's this NASDAQ trade sell, which is one trade. So you can see one is $14 loss, another one on 85. So it was just one trade, but it was divided into 2. That's why it records 7. However, I took 6 trades. 3 were winners, 3 were losers. So you can see the average winning percentage is about 1.9. I tend to have a risk reward of about 1:2 generally, but my losses are quite small. So it really helped me to be able to at least be profitable. And I ended up making about 3.5 for the month. So that's how I cleared the month of June. Looking for about 5.5 now, about 5.6 for me to clear, let's say 6% in general, for me to clear this phase. Actually, I'm looking for 4.4. I think I'm looking for 4.4. It's actually less than I thought, because I thought it's about 6%. So I'm looking for that percentage to see what will happen. Currently, I only have 2 open trades, which I'll share with you guys. So I have one open trade on gold, which you can see, which is running here. And I also have one open trade on the euro, which is currently also running. So these 2 trades are currently running. So that's generally how my trading has been on this account. On the other account, it's much or less the same thing. The only difference is that account size is different, and that's a real account because it was I passed that challenge. So hopefully, if I'm able to pass the challenge, then I'll share with you guys. If I'm not able, markets, you can't be so sure. You can't ever say solidly this will happen. You really have to wait till it happens. If I don't also, I'll share with you the lessons that I've learned or the different things that would have happened to change, because sometimes it's just the system which tends to do something different. So that's the update on this side. I hope if there's any question with regards to this, you can ask me. If there's none, I think I can stop there for this one. So the summary here is you can see the pound made me the most money, about half of the money that I made for the month. And then I also had some winning positions on gold. So those are the markets that made me money. And I think those are the markets that I'm mainly focused on trading nowadays. So very, very important. I shared there's a video I've taken time to create where I share the process that I use to enter trades now. So I'll be sharing with you guys also that. So someone is asking, how is my risk per day on the challenge? I tend to have an exposure of between 2 to 3% at a standard time. I don't trade on a day-to-day basis. I trade on a week-to-week basis, more or less. So every week I'll have a maximum exposure of about 3%. So I'm trying to make about 4 to 6% per week, sometimes 2, sometimes nothing. It's a loss actually, you have 2% loss, 3% loss. But that's how I'm trading. So is this a standard? No, it's not a swap-free account. In fact, they charge very highly for some swaps. You can find that you're losing about $30 on swaps. So it's very, very costly also to trade some of these accounts. But you have to just do it and try to beat those transactional costs so that you can be able to make money in the long run. But yeah, it's not a swap-free account. I'm paying for swaps. Sometimes I get positive swaps, but other times I get negative swaps, and I also have charges in the form of commissions, I think, which are executed instantly once I put in a position. So I'll look at different markets. This was a very, very interesting day when I was coming to the office. I was watching markets to see some potential runs. It was obviously the start of a new month. So I'm excited to see how the month will start, any potential setups that will come, how the last quarter ended. Also, this is the start of a new quarter, third quarter, it's the half of the month. So there's a lot going on in July, I think. So when I came into markets, I was looking for some potential moves, trying to see what's really happening with different markets and trying to identify some key opportunities. Found some, took some, neglected some. It's obviously part of the process also to try to be selective as possible. And that's what I did. So which are the markets that I'm going to look at? So I'll start with gold. And I normally start, anytime I'm doing a new monthly update, I like looking at markets from a monthly perspective to just see what's happening from a big picture perspective. So if you look at gold, for example, gold spot US dollar, since 2020, in August 2020 when we topped at 2,000, gold has been moving sideways between 2,000 and 1,700 from a big picture perspective, because you can see we had 2,000, we came back to 1,700, we hit 2,000 again, came back to around 1,650, went back all the way to 2,000, forming something that resembles a triple top formation. If you're really paying attention, you will likely observe this looks like a triple top formation. But you can't trade generally just saying this is a triple top formation, so I'm short till this price. No, you have to follow what markets are doing on a month-to-month basis. So last month, you can see obviously the close was quite bearish. That probably suggests markets are still likely to move lower. But let's see in the lower time frames what information we get. So on the lower time frames, you can see from the weekly perspective, markets sort of rejected 1900 last week, came back higher to close about 1920s, 1918, 1919 levels. That's where markets decided to close for the week. And it looks like we had a decline from 2000 all the way to 1900. So I'm looking for probably some bullish momentum to come back in the market. As long as we're above 1900, I think I'll be bullish. But if we close below 1900, then I think it's time to pivot to bearish scenarios or bearish outlooks. If I look at it from the daily perspective, because I like looking at markets from a systematic process, markets last month closed at around the 1900 level, bouncing off this trend line the third time in the S2 level. We had a decline this time from about the fair value areas down all the way to this level. This month we started with some momentum. We're trading around the fair value area. So what am I looking for? Probably short term. I'm looking for a move first of all to around 1935, 1940, 1950. In the extreme cases, I don't think 50 is far-fetched. I think 50 can be easily attained. So I'm looking for markets to come back higher to those levels. On the 4-hour time frame, if you look at markets, they've opened again around fair value. So we opened around fair value, but you can see with the last 4 hours, we had a significant bullish run. This current candle is 1 hour, 13 minutes away from the closure. So not much can be told from this candle. You still have to wait for the close. That's why when you're trading, you don't really follow every candlestick. If you do that, you'll get lost in randomness, because this could close as a bearish candle, then you could have a next bullish candle. So it's more about levels. And based on that, I think if price remains above the P level, then I'll be looking for R2 level, which is 1940 and probably 1950, like I had earlier suggested. So quite bullish on gold. And for this one, I have some skin in the game. I actually have two running positions. I have two running positions actually. One on the other account and the other one. So I got an entry exactly where it stand at 1912. It's a quarterly level. For those who have attended my strategy, my style of trading, you know how important some of these things are when I'm looking at markets, and I shared with you guys how you can also be able to incorporate them. So you can see I got this one quite well. I waited for it, timed it during London, and it moved quite higher. Just following the process and sticking to how you look at markets. So still running. Let's see how it will go by the end of the week. The next market that I look at is oil. I've brought back oil because I have been running tests on it. I really want to understand it from a fundamental perspective. I think it's a very volatile market, so there's some very good opportunities in it. So trying to look at it more and spend some more time with this market. But I removed some currencies, like I removed Euro Yen from my normal list of pairs that I trade, and I brought in oil. So that also really helps. I observed that I was not making any money on Euro Yen. Instead, I was losing money. And it was mainly because I was very poor at sort of like having a feel for that market, and like other markets that I trade. So it was very hard for me to be able to make money, or rather my system was just generally not doing well in that market. So oil, starting from the weekly chart, it's quite clear that last year we had a significant bull run on oil all the way to the 120 level. And we started a decline lower, and I think we've never had any significant bullish run ever since. So for the whole of this year, it looks like oil has been just moving sideways since December 2022, as you can see, all the way to right now. So about 6 months, oil is just trading between 70 and 80. Really struggling to go below 67.5, 65 level. Really struggling to break above the 80 level. I think the break of those two levels will tell us we are out of the range. But as long as you're trading between that range, I think it's more important for you to trade based on the price movements. On the lower time frames, there wasn't much that was interesting to me on this market. Looks like today we'll have a significant shooting star close at 70. We'll come back to 65 again to retest it, or it could come back to 75 again to retest it. So not a market that I have a straight grasp on. So you can see quite clear it's a ranging market. So I tend to avoid such markets. On the 4-hour, nothing interesting again for me. Today I saw a big run from about 70, closing above 70. You can see I've quickly come back above it. But I think as long as you're above 70, 72.5, probably 75, will be the levels that will be attained. But if you come back above below the P level and below 70, probably the flip side. So not a market that I'd want to be in. I'd want markets where there's more clarity. On the Dow, I think stocks are doing exceptionally well. If you look at what the Nasdaq has been doing, if you look at what the Dow is currently doing, stocks are quite up. I was actually discussing it with one of my colleagues, and we were talking about how rates are at 5%, and the stock market is where it was probably when rates were at 0 to 0.5, and when 6 trillion was pumped into the economy. So the economy is still resilient. Markets are still moving higher. We've not seen any decline. And we trade price. We don't trade our opinion. We don't trade what we think the valuations are. We trade the price of what markets are doing. And if you look at price, if you just observe what is happening currently on price, for example, from the daily perspective, it's quite clear that this market is likely to hit the 35,000 level. From my perspective, I think there's a high chance we could see 34,600, 34,750. If we break those levels, we could see 35,000. If we reject these levels, probably revisit 34, then rally back to 35. But I think I'm looking for 35,000. 35,000 is quite interesting. I want to see how price will react at that level, 35,000. Will we have a significant break, or will we have a rejection and a significant move to the downside? I really am interested to see how price will react at that level. On the 4-hour time frame, not much of interest though. So there was a potential setup here, but you can see it's quite clear markets are running away from us. They're moving quite higher. We're likely to break that 4.5 and just visit the R2 level and probably the R3 level. This is US 100, the Nasdaq. Very, very fast market, very volatile market, offers very, very good opportunities, but also very, very risky. Last week, just go to the weekly time frame again, you'll observe that the Nasdaq has been having a significant bull run. So you can see all the way from about 10,500, we're now back to 15,000. The recent top we had was at 16.5. It looks like we've broken 15,000 significantly, so we could visit 15.5, probably 16. In the extreme cases, 16.5. I wouldn't be surprised at all if you were to even visit 16.5. So if I go back down to the daily, I'm therefore looking for bullish scenarios, trying to see where markets are likely headed. So I'm watching what price will do at this level, 15 to 91 or one level. If we reject this level, we could come back to the fair value area before moving higher. If we break it, we could easily see 15,500. On the 4-hour time frame, I was looking for a move back to this potential line for me to get an entry back to this level. But based on how price is behaving, it's just a question of patience to wait and see if this will come. If it doesn't come, no risk reward for me here. I think there's a high chance markets will come back here and probably here. But there isn't much of a risk reward and an opportunity to make clean money. So the next market that I look at is, I'm going now to the currencies. So euro dollar. Euro dollar is also a very, very interesting market. So I have a position here. So I have two positions. I have one on gold and I have one on euro dollar. Actually shared them on the Discord platform. On the daily chart, if I just look at it from the daily perspective, last week we closed significantly higher with some significant bullish momentum from the 1.0875 quarter level, moved significantly higher. So I was looking for a move back up to the 1.1 level. If you go back down to the 4-hour time frames, you'll see the original idea was 1, 2. We got a bounce here, so we came down, had a retest of 1.0875. So I got an entry there. See some bullish momentum has come back in. I still think there's a very high chance markets will break past this trend line. The trend is your friend until it bends, and I think for now the trend is to the upside, not the downside. The markets really struggled last week to go significantly lower. And I think the momentum we've seen today is also an indicator that you could easily see a rally. However, if we ever were to turn to the downside, so I'm up about a third of the profits that I'm supposed to make, which is not quite bad. So let's see how it closes today and tomorrow. The next market that I look at is GBP USD. So I decided not to take this one also, but the idea is still the same. So you can see bounce 1, bounce 2, bounce 3. We opened at fair value, so there was a potential move back up all the way to here. But I decided that the correlation risk was too high. So instead of being greedy, trying to look for very high returns, I decided to pick one and just follow the process. So I picked GU and I picked EU and I picked gold. So those are the two current positions that I'm running. And that's my outlook on the different markets. Now, if you look at different things, for example, if we come back to the economic calendar, on Tuesday we have, which is tomorrow at 7:30 a.m., we have Reserve Bank of Australia releasing their interest rate decisions. The last time they hiked by 25 basis points, really shocking markets. Then on Friday, I think we have non-farm payrolls also. That's a key interesting data point. Everything else, I think, is noise to me. I think there isn't much that is likely to significantly alter price and move price to a different direction. So that's my outlook on the different markets that I normally look. I think I've checked all markets that I normally trade. I don't trade any more markets. Just trade those 6 markets, 2 commodities, 2 indices, 2 currencies. Very, very focused on understanding just those markets. I think those are enough to generate the level of returns that I'm looking for in the market. So unless there's someone with a question, I could stop there. But if you have some questions, some suggestions, I could also look at them. Okay, so someone is asking me to look at Bitcoin. And my long-term insights on Bitcoin. So Bitcoin has actually come back to 31,000 for a very, very long time. It was back lower. If you want to get the long-term view of these markets, obviously you just have to get it from the chart. That's what you're trained to do, I think, as a trader. As much as you look at the fundamentals, the price normally tells you what is likely to happen. So for example, if you just look at this market, it's quite clear. We're still trading at the fair value area. The P level was at 26,700. We're currently at 31,000. If we move to the upside, I think we could see 40,000 because we've actually gone above the 30,000 level. But let's see from a weekly perspective, I think there's better patterns there to sort of clarify some things. So yeah, we took out that descending, moved to the downside. It looks like we have 3 bounces here to the upside. So this is 1, that's 2, yeah, that's 3. So you can see we have 1, 2, 3. We've actually closed above the 30,000 level. So I think there's a high chance you could come to 40,000. Yep, 40,000 could be seen. I think these markets look extremely bullish from price. However, if we come back below this level, I think I'd pivot to shorts. It's all, again, Caleb will say here there's a flag. I don't know if the people who trade flags would agree, probably. But it could also hit these levels, then significantly sell off. I think as long as you're above this level, I don't want to be long. But if you come back below this level, so below 25,000, I don't want to pivot or cut my loss to short. But above 25,000, I don't want to be long, at least till 40,000. Again, it's very, very hard for you to be accurate in long-term forecasts. It's very, very hard. And to be accurate, I mean to be accurate in terms of direction, timing, and when to get in and when to get out. For example, you could say that Bitcoin will one day hit 100,000. That's certain. When? It's almost impossible for you to tell. It could take 5 years, it could take 7, it could take 2, it could take 1. It's really, really hard for you to tell precisely. I think if you really try to do that, you may miss the point. But it's easier for you to tell short-term moves. For example, 30 to 40,000, which is about a 30% increase. You can easily tell. So you can easily get such moves, and you can trade such moves. But it's also very, very hard for you to really get other moves that you may think are. But there are some good trades here. Like I think I'd favor buying Ripple over Bitcoin. I think I'd also favor Ethereum. I think Ripple though has the best of chances. If Ripple comes back to 1.5, you have 300% increase. That could happen very, very fast as other markets are going higher, because I think their cases are getting settled a bit. So those are the markets that I'd want to really, really focus on. Also, we're pleased to announce that we have partnered with XM. So for a long time, we partnered with Paperstone before, but we broke our partnership program sometime. And now we've officially partnered with XM. XM also has some very, very good features, like they give you 100% bonus on the accounts that you open. You stand a chance to win about $15,000 in prizes if you trade some challenges that they normally have. So they also have some exciting things. They're also likely to get the Kenyan license very, very soon. So they're coming into the market, and they are also very good technologies again. So it works really, really well. Very fast account opening process. So you can check them out. We'll drop the links for you to be able to see I will also embed them on our website. So we just recently got into that partnership. But you can be sure you'll have a wonderful experience trading with them. And probably you will also see us do some more things with them moving forward. We also have the July intake for those people who are interested in trading with us. So if you're interested in trading with us, learning how we look at markets, the different approaches that we use, you can come visit us at Financial Hub. We're located at Lavington Mall, Chandarana Building, 4th floor. You'll find us here. We'll take you through. We'll share with you different things. You can just come in, visit, inquire, join our trading community, learn with us, share with us what you're doing. We also love learning from people, and we'd be interested in learning from the different things that you guys are doing out there. So I think if there are other questions, I will answer. If there are no other questions, I think I'll stop there. Any other questions? Oh, so someone is asking, is there something wrong with Pepperstone? Not really anything wrong, but we think XM has far much better deals. That's why we decided to officially cross over to the other side. We think they have better deals when it comes to some things, and that's why we decided to at least move to that side. Will you go through GBP, JPY? Now, unfortunately, I don't trade this pair, but it's not like I can't form a solid, not a solid grasp, but I can have at least a touch or a feel of what it's doing by just looking at the chart. But I may not be as accurate as the markets that I normally watch on a day-to-day, week-to-week basis, because I've obviously developed a relationship with markets which I watch that much. Now, this is a market, first of all, which has been having a significant bullish run. Reason being the carry trade, obviously. The yen have negative rates, while the pound rates are at 4.2. So a very, very basic trade. It's called a carry trade. And ever since, this market has been moving higher from about 155 to trade as high as 185 right now. We're trading at extreme levels. I think we have really, really approached extreme levels. As much as I'd want to be a buyer, I think we're really, really in the last stages of this significant bull market. But again, it's very, very hard to time the top. And you have to really follow the price for you to know what to do. However, I think the top is somewhere around here. I don't think we have another move like the one we've had. We're in the last inning of a bull market. At the last stage of it, I think, in this market. So we're likely to see a significant turn sooner or later, especially when the fundamentals change. I think I'd want to see a pause in rate hikes, probably a reversal with some banks, a recession maybe. There's some things that will just trigger these markets to reverse. Those are the things I'd be looking for. So on the daily, I think we're approaching 185. 185 is where I'd want to pay attention. If we break 185, probably 187.5. If we don't break 185, I think we might likely visit 180, retest 180. I want to see what will happen at 180. If we break 180, probably 175. I'm really interested in trading price to price levels, so I'm really focused on price action in specific zones. That's why you can see I'm looking for specific levels in the market when I'm trading. I don't just pay attention to random levels. I pay attention to very, very specific prices. So that's what I have on GJ. Let me not go through the lower time frames. These time frames I wouldn't tell much. I'd have to spend more time with this market. So let me just leave it from the daily chart. I think I've shared something that can be of help for you. You can be able to put that in perspective on the lower time frames. So when you're taking up my funded FX accounts, will you recommend 8-cap broker or Think Markets? I think I'd recommend Think Markets. 8-cap has high levels of slippage and I think spreads. So Think Markets is better. Can you explain the withdrawal process through the cryptocurrency wallet and why you prefer it over bank transfer? So it's just basic. What you basically do is you'll have your withdrawal button somewhere. Then you'll just click withdraw. It will ask you which method you'll put in cryptocurrency. When you put in cryptocurrency, you just key in your wallet, your Bitcoin wallet address, and then you key in the amount that you want to withdraw, and then they send it to your Bitcoin wallet address. So nothing hard. And why we prefer it over bank transfer is it's instant. So the money gets to your bank account instantly. Bank transfers normally take 3, 4, sometimes weekends you can't even get the transfer. But cryptos, all the time. So we prefer to have it in cryptos. Any other question? Okay, so I think I'll stop there. I'll see you. I'll catch up with you guys on the next one. So podcast coming out. We have some very interesting episodes coming in. I'm sure you'll love them. So coming out soon. Very, very soon. So thank you, Ashira. I'll see you guys. Wish you have a profitable week. And may the pips be with you. May the lords of the market favor you. And may you make money. But even if you lose, make sure you follow your plan. That's the secret of the game. Catch you guys in the next one.